On the topic of China's weak economic data, now I caught up with Dalio, founder of Bridgewater Associates, on the sidelines of the Milken Institute's Asia Summit. Now, he believes restructuring China's local government debt remains crucial for the country's economic revival.
I think that China right now is at a juncture. And if I take the economic, the real problem is that the real estate debt problem and the local government debt problem has not been dealt with adequately yet. There needs to be a restructuring of the debt. So if we look at China, let's take the various sectors within China. The household sector, 70% of their savings is in real estate. That real estate's gone down. Stocks have gone down. Incomes are threatened. And so they're holding money in cash. And so that's a problem. As far as government spending, which a lot of the economy is dependent on, about 83% of government spending is local government spending. And those local governments have gotten their money from selling land and also borrowing money. They can't now make land sales. And they also, the borrowing is not going to work. And those who they borrowed from are going to continue to have problems. It's been let go too long. And there needs to be a restructuring and a change in monetary policy. So from an economic point of view, I think we're at an inflection point. If that is not dealt with sooner, then there's the risk of something like a Japanese situation economically for that period. So I think that that's what it looks like domestically. Internationally, again, I think the issue of taking manufacturing, going to the third world and using technologies, the chips in the third world will be part of the plan. And I think that probably they'll continue to remain competitive in that. So those are the issues that have to be dealt with, I think.
So, Ray, if you had the ears of the Chinese policymakers, how would you be advising them to handle the economy then?
Now, just what I've said. It's the difficult process of restructuring debt. And it's a very difficult process, particularly at a politically sensitive time, because when you restructure debt, you're restructuring value. You're losing when you write down some of the debt. You are writing down some entities' assets. And so you have to, that challenging exercise of restructuring the debt and then also having a monetary policy that is conducive to not holding money in cash. There's a pushing on a string phenomenon in this part of the cycle. And so right now, when you have deflation and you have an interest rate that is above the inflation rate, and that is not only, it's the highest returning asset and it's the safest asset. You have to chase it out with a monetary policy in which interest rates are below the inflation rate, that the nominal bond yield is below the nominal growth rate. Otherwise, the debt continues to compound and become a problem. And you have to have a positive slope yield curve. And with that, you'll probably have to have some currency weakness, sort of the way the Japanese have dealt with their debt problem.
I'd like to talk about the investment environment. I mean, falling interest rates means a potentially new investment environment. How should investors be adjusting their portfolio allocation?
I think the greatest challenge of investors is now how to diversify well. Because if you look at the returns of asset classes and so on, so much is concentrated in how the U.S. market, and particularly the tech sector of the U.S. market, a limited number of companies have performed well. So when you're looking at that, there's an equity, everybody's long, and there's a long bias, and it's concentrated in those limited number of companies, which, by the way, reflects a limited number of people and a limited and the whole issue of the wealth gap issues. But anyway, so when you're thinking about that, you have to think about how to diversify well. That's a whole other subject. But I think that some issues like to think about maybe inflation index bonds rather than normal bonds. I think there's some gold in the portfolio serves to diversify the portfolio so that if those other assets don't perform well, there's better levels of diversification and also where you invest. Right now, I would say internationally, I would say the three things that I look at is as a country, and just like individuals or companies, do they? What's their income statement and balance sheet like? Do they earn more than they spend? And do they have assets, more assets than liabilities? That's going to be important in this time. What is their internal effectiveness? Do they have internal order or internal disorder? How effective are they being productive? And number three is, are they in the risk of an international conflict? I think that the neutral, productive countries, so if I was to look at that, I would say, as you look to ASEAN countries in this region, some of those, and India and so on, those are the countries that are neutral in this and also have, they're at the point where they're at their takeoff point, they have enough capital to invest and become more productive. So diversification into those kinds of assets it should be a part of the people's portfolios, I believe.